Dubai Gold and Commodities Exchange, or the DGCX, is launching on Friday a futures contract based on the Bombay Stock Exchange's Sensex index. And in the studio to pad out the details is Gary Anderson, the CEO of the DGCX. Very good morning to you, Gary. Thanks for coming in.
Good morning.
Explain the logic, really, behind the introduction of this contract.
Well, the logic of the contract is that the Sensex contract fits very nicely into our product class. We currently have the Indian rupee versus the dollar, which is our most successful contract to date, and really is to supplement that contract itself and also expand into our Indian strategy. The other thing that we're looking to do with the Sensex itself is to diversify into the new equity asset class itself. So currently we just have three asset classes, which is currencies, metals and energy. So by diversifying into equities and Sensex in particular, this will give us the ability to grow further.
Now, in this region here, we haven't seen very many sort of futures contracts based on indices or even single stock futures. Explain the contract in detail, the relationship between your contract and the Sensex index.
Well, the Sensex 30 is literally a replica of what trades onshore at the BSE. The only difference being is that we're going to be based in US dollars. So therefore, for the investor offshore, there is no currency risk at all. So it just literally does replicate what happens onshore and covers the top 30 most heavily traded stocks in India.
Sorry, Brandy.
No, go.
What sort of lot size are we looking at here?
We're looking literally, the contract is, or the index is currently trading around 19,200, and we're trading at $1 per index point. So the value of that contract, or the value of those 30 shares combined, is around $19,200.
So who are you pitching this at? Who do you think is going to want to invest in the Indian market effectively this way?
In terms of the people we're looking at, it's most certainly the retail participation, the non-resident Indians that are within the Middle East in particular. There are over 6 million of those present here, so we expect a great deal of interest from them in particular. But also what we're looking to do, and this is why we're in collaboration with the Bombay Stock Exchange, we're looking to extend the Sensex 30 product itself across Europe and into the US. And what we'll be able to provide for that is the liquidity that will bring in those external investors into the marketplace.
So could we see this idea rolled out here to other indices, to other markets? What's next?
Yes, most definitely. I mean, we do have plans next year to launch indices that are representative of the GCC in particular. Later on this year, we're going to launch a MSCI India future contract, which again will complement the Sensex contract. The MSCI will look at more predominantly the institutional investor rather than the retail, which we're currently focused on now. And I believe that in sort of 2014 we will be introducing indices that are relevant to the GCC itself.
I presume you've got some licensing agreement with the BSE, have you? For the
Yes, we
Sensex?
have, absolutely. We've had that now literally for over 2 years, and we've been working very, very closely with them, and it's just come to fruition this past 6 months. So we've been working very much in terms of roadshows, onshore and offshore, and Ashish Chauhan is here with us today in Dubai, who's the CEO for the Bombay Stock Exchange.
How deep does the relationship run? I mean, would they, for instance, allow you to do single stock futures on Indian stocks?
We're always talking, and we're always in negotiations with exchanges about how we can collaborate, and more importantly, how we can increase the liquidity and access to the end user itself. So those things are on the table. We're not quite ready for that, but this is a very good start.
Is there an equivalent contract in India? Is there going to be fungibility with any other market in the world?
There's no fungibility as such, because we are primarily in offshore and we're also trading in US dollars. So there are no actual Indian rupee movements at all. But the correlation between what we're trading and what's trading onshore is basically 100%.
What about other products, full stop? I mean, there's been a lot of volatility in the rupee recently. That must have made your rupee contract very exciting.
Yes, it has. It's been very, very volatile. Obviously, for us on the side, watching and seeing the volumes grow, it's obviously a very positive thing. But again, I'm sure it can be extremely frustrating for the end users to see that kind of volatility in the markets. But it has, again, improved our volumes in the month of June, where we had a record month again this year.
$19,200 is the entry level, because that's the cost of one contract.
That's correct.
Is there a minimum number of contracts people will have to buy?
No, when you're buying a Sensex future contract, you are buying one lot. That one lot consists of the index value, which is $19,200. but you pay a margin up front. So basically, it's not that you're actually putting up the 19,200. You're putting up, say, approximately $600-700 per lot that you buy or sell.
So it is a leveraged contract?
It is a leveraged contract, like all futures contracts. Every exchange offers what we call margins and the ability to basically leverage on the back of that. That's why futures actually are a very efficient product to use.
Any thoughts of offering mini contracts?
Most definitely. I mean, we introduced a mini INR contract 6 weeks ago, which has been very successful, has a very good take-up, and our rationale for doing that was to basically, for some of the small investors or smaller amounts of exposure that people had, it gave them the opportunity to do that. And if there was any tail risk, and what I mean by is where they were arbitraging between the big contract and other commodity products in particular, they could basically fully hedge their exposure by trading the mini contract itself. In terms of equities, I think, again, that's probably way off. We need to get the region using or utilising index futures first, and then we can perhaps focus on a mini contract.
Obviously, only your members are allowed to trade on the exchange. I'm guessing that most of those members, or probably all of them, are institutional. Are there any retail members?
Yes, certainly. We do have retail members of DGCX, and again, this past 12 months, we've seen our distribution in terms of membership grow. So as back into the UK, into Hong Kong and Singapore also. So that also increases our membership and also our distribution in terms of the institutional side. But again, we have regional members here that very much focus on the retail element of the exchange itself.
What other new contracts could we see from you? I mean, we've had a bit of a chat there about other indices, other futures contracts. What about other currencies?
Other currencies, we're always looking, I think, like every exchange, at the renminbi, which again is out there, and the China economy is obviously having a bit of a tough time at this very moment. We are most certainly looking at the renminbi, and one of the main reasons we're looking at that is because we're going to launch a plastics contract in Q3 of this year. Plastics, GCC is one of the biggest producers of plastics in the world now, just over 20%. It's Dubai's second biggest export in terms of polymers, and we see a lot of export out of this region into China itself. And last year in September 2012, we signed a memorandum of understanding with the Dalian Commodity Exchange, who have a plastics contracts, and also they are going to launch a polypropylene contract this year. And what we're hoping to do is to work with them and try and create a big liquidity pool across China, the Middle East, and the rest of the world.
So that's definitely happening, is it? Because this plastics contract we've talked about for 6 or 7 years now.
Yes, again, timing is everything, and the contract was pretty much going to be launched around 2008, and obviously the financial mayhem that occurred, and obviously also here in the Middle East itself and in Dubai in particular. So the contract basically was shelved, for want of a better word. Plastics in that year halved literally in price, so the take-up was going to be very, very limited. But what we've done again is focus this last 18 months on the contract specifications and what the industry actually desires from an exchange such as DGCX, and again working very closely with the Dalian Commodity Exchange. Our specifications are very, very alike.
We do have to ask you, actually, just before you go, slightly off topic, but you haven't heard any rumours of big tall towers that you might be getting as neighbours, have you?
I have heard rumours of very big tall towers, and I think I should really leave that to the DMCC
Have you heard any rumours of
comment.
Where exactly they may be positioned?
The only place it can be is on JLT. I think I have a feeling where it may be, sort of in terms of position.
Oh, come on, Gary, it's my second to last show. Make it a good one.
I'm going to guess that it could be sort of the back of the JLT on the Abu Dhabi end. That's as good as you're going to get from me.
We will obviously that will come around in the fullness of time. We'll find out exactly where that's going to be. Last thing, I want to ask you about with the sort of splurge on building again. We've seen so many contracts restarting. There could well be a spike in building materials over the next few months and into the years. You were talking initially about things like rebar contracts, glass, steel. We even talked about cement and things coming into that. What about more construction-related contracts?
Yes, certainly. Again, I think the steel product most definitely is one that we've been thinking of, and we had listed that originally on the exchange. What we did in December of last year, we basically we delisted that contract because of our new IT migration, and we're going to look at the steel contract again in the latter part of this year, so we can again look at that and bring it back on to DGCX. But again, it is all about timing, and the most important thing that we do at the exchange is we listen to the end users to make sure that they do require that contract, to make sure there is a need for it, and there does appear to be one. It's again timing and requirements.
Well, look, thank you so much for coming in and joining us this morning. Gary Anderson is the CEO of the DGCX, the Dubai Gold and Commodities Exchange.
Thank you.